Here is the U.S. market summary for Wednesday, July 23, 2025. Today, the U.S. stock market closed higher, with the S&P 500 setting a new record. All four major indices advanced, driven by the finalized U.S.-Japan trade agreement and optimism over a potential U.S.-EU trade deal. Sector gains were led by healthcare, industrials, energy, financials, consumer discretionary, and technology. Communication services, materials, real estate, and defensives were marginally higher, while utilities declined. The Fear and Greed Index shifted from greed to extreme greed, signaling rising risk appetite. President Trump announced a 15% mutual tariff agreement with Japan, covering autos and other imports. Japan committed to a $550 billion investment fund in the U.S., LNG development in Alaska, and greater market access for U.S. agriculture. The U.S. and EU are nearing a similar 15% tariff agreement. The Treasury Secretary indicated this may become the default unless the EU offers an innovative alternative. The EU's trade surplus with the U.S. makes it more exposed to escalating pressure. Indonesia also agreed to fully open its markets. The administration reaffirmed it will lower tariffs only for countries with reciprocal market access. J.P. Morgan warned even reduced tariffs may weigh on growth. Goldman Sachs forecast that tariffs will fuel inflation and suppress growth over the next 3 years. Alphabet reported Q2 results after the close, exceeding estimates on both revenue and earnings. Cloud revenue grew 31%, and AI investment was raised by $10 billion. Despite concerns about AI disrupting traditional search growth accelerated and paid clicks rose 4% year-over-year. Market share risk from GPT and other AI competitors remains. Google Gemini is gaining traction but faces intense competition. Tesla posted Q2 results with revenue above expectations and EPS in line. After-hours trading declined following CEO Elon Musk's warning of difficult quarters ahead. Operating income fell 42% year-over-year. Progress in full self-driving supported the stock. The company reaffirmed its low-cost model timeline. Former Tesla bull Ross Gerber criticized the results, citing negative free cash flow, declining high-end vehicle sales, and reputational risks from Musk. He expressed concern over a potential acquisition of XAI at excessive cost to shareholders. June existing home sales fell sharply. Investors await Thursday's jobless claims and S&P Global PMI data. Treasury yields rebounded after a 5-day decline. Markets no longer expect a rate cut next week, but bond pricing reflects 75 basis points of rate cuts in 2026, up from 25 in April. The White House introduced a national AI action plan with 90 policy initiatives focused on deregulation, infrastructure, and global leadership. Related tech stocks rose. The Treasury Secretary signaled broader U.S.-China talks, potentially extending beyond export controls. The U.S. aims to boost advanced manufacturing and secure supply chains. China is encouraged to shift toward consumption-driven growth, supporting future cooperation. Jeff Bezos is reportedly considering acquiring CNBC to diversify beyond The Washington Post amid concerns about political bias. Nationwide's Merck Hackett noted momentum toward a trade resolution by August 1. Interactive Brokers' Jose Torres said recent trade headlines are fueling risk-on sentiment. Louis Navellier emphasized that earnings remain above expectations and market trends are constructive.